Hey guys, Alex Winkler here, and welcome to the weekly trade review number 8. So in a nutshell, mostly this week I was on the sidelines. I wasn't really trading too much this week, although I was making watch lists every morning and they were extremely on point. Unfortunately, I wasn't able to capitalize on that, mainly because in the beginning of the week I was a bit sick, and I definitely don't like trading when I'm not really the best mindset. And the second part is my brother and I were working on the Enzlo site a lot. We also had a few issues just in the second half of the week. We even had an 8-hour long Skype phone call, so there was a lot of other business stuff that was keeping me from trading, which is fine. You know, I don't want to day trade every day, and I typically only want to do it when the perfect setups are there. You know, you always can't be following the ticker, so it's no problem. Unfortunately, I do sometimes like setting out those limit orders with stop losses, kind of utilizing a bit of trading when I'm not really following the ticker, but I didn't really get around to that too much. So what we'll be focusing on this week is the 4 trades that I did make and what I learned from it. Another interesting side note is that I did a little weekly rolling average to check in how I'm doing. I've done about 8 weeks now of document trading. This is, after all, weekly trade review number 8, and I found that I've been doing a bit worse than I expected. So what I found was I'm doing about $84 per week average profit instead of my weekly goal of $1,000 per week, which is a bit stressful because I really know I can do a lot better, because I have done a lot better. However, that wasn't documented, so it doesn't really count. What I am learning from the documentation is why sometimes my trading is a bit worse than it should be, so I do really enjoy doing it. I would say there's 3 reasons my trading hasn't been what I expected it to be, and I definitely don't want to put any blame anywhere, but it's during these weekly reviews and from my constant trading, I do realize there's a few things, especially with the day trading, not necessarily the long-term investments, because that's, you know, pretty fine and easy to do. But the day trading, there's 3 things that kind of affect my trading a lot. And I've noticed, one, traveling. I'm not that good yet at trading and traveling. I do, you know, I'm practicing placing limit orders ahead of time, but I'm more of a person that likes to follow the ticker instead of, you know, relying on these pre-made entries and exits. So that's one of the big reasons. The second reason is my brother and I have been launching a lot of new stuff, and you know, our businesses are growing. Most of the time I am working on our company and the affiliate network, and now our new consulting, you know, our email software. So there's a lot of moving things that I'm also doing besides trading. This is more of a side project for me, something that I really like doing, but again, I can't fully dedicate my time to it. And the third thing I've noticed is really the documenting of the trades is something I'm really not used to. So now that you know, every trade I do, I know I'm going to spend about 15 minutes writing a review on it. During the trade, I'm in the chat room. I write everything down ahead of time, which is really good and it really helps. But overall, I'm not really used to it. And the second you're doing something that you're not used to, you start overthinking it. You're not really comfortable. You're not in your groove. And before, especially as an equities trader, I was doing it for years, and I really had my groove. You know, and the trading was a lot quicker. You only trade in that first hour that the market's open typically. And you could be in and out of trade in 5 minutes, 10 minutes, which is really nice. And I still do equity trading on the side, but I really want to dedicate all of my free time towards crypto trading, not just for myself, but for you guys, so I can get better and better at it and make better and better weeks. That being said, overall, I am actually pretty happy. I mean, I can't complain. I'm still $1,500 up, which isn't huge, but it's better than being negative. I also know as a trader, even the best traders have sometimes, you know, a week or a month or even a quarter or sometimes a whole entire year where they're just, you know, completely off their game. So 8 weeks where we're just not making those super high profits and just kind of rolling around with more like a neutral territory is completely fine with me. I can accept that, and I'm not going to get upset about it. Also, with documenting, as uncomfortable it is for me right now, I'm getting used to it. There is a huge benefit of I have so much material now that I can look back on and I constantly review. It's really helping me build a kind of proof of concept of my favorite trading strategies, and I have a lot of statistics and analytics I can sort through to really find out what works for me. And that's something I never had in the past. It was all kind of just, gut feeling, and this is something that is much more scalable and sustainable over the long term. So I really do like doing it. It's just something I have to get used to doing. Also, as you can see here, I only made 4 trades this week. My first trade was actually a pretty big negative one. We'll review that one definitely. This is a good lesson. And the other 3 were more or less scratches. Besides, the last one was actually quite nice, but I closed my position way too early. I'll review that as well. Here you can see my new running average and the week total, which is pretty small. There's also no realized trades, so no long-term positions that I closed, which is usually about half of my profits. But overall, yeah, I just wasn't really day trading this week. For top trades, I'm not going to lie, I didn't have any favorites. There was one trade I did like. This last 126 Neo trade was pretty cool, but I wouldn't say it was my favorite because I made a huge mistake on it, and I'll review that with you guys in a second. For biggest lessons, I broke it into 2 parts because there really is 2 specific things that I wanted to review. One is when to use market orders, and the last trade, 123, or the first trade of the week, 123 with XRP Ripple, this is literally the best example of when to use a market order. And this happened because I left the computer just for a little bit, a few minutes, and when I came back, it was a disaster zone. All right, here you can see $92 loss, which isn't that much because I had a small position, but the percentage loss is massive. 5% loss on this. This is huge. This is something we try to avoid at all costs. And what happened was, it was actually a really nice chart pattern. If I could zoom out on this, I would, and I don't want to take too much time for looking for the chart. Basically, though, we had a nice first stare, and I was looking out for the second stare breakout, which the odds were on our side, so everything was looking good with the chart pattern. However, I left for a little bit, and when I came back, we had massive red candles, and I got out as fast as possible. What I should have done was, if I knew I was going away just for a few minutes or even longer than that, place a market order, market stop loss right here. And that way, if the trade does go against me, I'm not going to be taking a loss greater than, I would say, 0.32, because as a market, you might get filled a bit lower, but you will get filled, and I would have saved this loss. The loss probably would have been around 2%. I would have saved $50 in losses, so I could have avoided a real loss and probably had more of a scratch kind of loss. So to take away, quick lesson: if you're leaving your computer or you're not going to be able to watch a trade, whatever the situation is, if you're not following the ticker tick by tick and you want to play it safe, definitely create a market stop loss to get out. And the reason you don't want to make a limit stop loss, even though I'm always in favor of limit orders and being a maker instead of a taker, is because when the price falls, sometimes it falls too fast and your limit order won't get executed. If that was the case, I would have got out at the same place and there would have been no advantage of making a stop loss. To dive quickly into these last 3 trades, there's one thing all these trades have in common, and all of them I didn't stick to the plan fully, which is really depressing. And this is because the habit I have from equities trading that I talked about before, where you only trade in that 1 hour when the market is open, typically because there's a lot of volumes. You can also trade, an hour before the market closes. That's usually where you see a lot of volume as well. But you don't want to really be trading the rest of the day or the whole day, because it's choppy, it's messy. There's not a lot of things going on. Breakouts are usually fake outs. It's a mess. But with day trading cryptocurrency, it's a 24/7 market, right? Things don't close, so sometimes you have to wait a few hours for that breakout to happen because you don't really know. There's no specific time when there's volume. I have noticed a few hours when there is more volume, but it's no guarantee that that's when there's going to be a breakout or anything. So that's one thing I've really learned, and I have to really work on with crypto trading, is having a longer time horizon. And these 3 trades will show you that exactly. So the first trade, EOS, here you can see I was getting ready for a second stare, a nice little breakout, which happened perfectly. I averaged in here. However, as I was waiting a few, I don't know, this is maybe around 2 hours, I eventually got out because the breakout never happened, which at first I was happy, but then look at this, super nice breakout, exactly what I was waiting for. So here, you know, the trade was going exactly the way I planned. However, I got a little too impatient and closed my trade, took a small little profit, which more or less is a scratch because it's under really anything under $150 is a scratch. So I missed that nice big run up. The second trade, 125, was actually a short, and it could have been really nice if I got out here. I shorted here. I missed this because I'm not sure. I wasn't following the ticker though. And then I got out here when nothing really great was happening. Got a little choppy. I was a bit upset that I missed this nice drop. But also this trade dropped off really nicely from this longer bear flag that was forming. So if I just held on to this one also a bit longer, it would have been a really, really nice gain. I would say the worst one though that I really want to recap is trade 126. And this was also a short that I traded a bit unusually, I would say. So here was the first bear flag forming, and I really, really got excited here, but I was a bit, I guess, less aggressive with my entry. I wanted the price to come up here, and I had most of my orders right up here to short, and the price never came up there. It took out one of my orders, but I would say it was about a fourth of what I wanted. So I think I got about 80 shares in the beginning, but I was looking for around 240. Yeah, 80 shares are in the beginning, and I was looking for much, much more than that. So when the price tanked, this really wasn't a big gain for me. So when there was a nice little bounce, I was a bit aggressive and did 2 more shorts. But then I was holding, and then this bear flag was looking a little shaky, and eventually got out right here, right before the big dip. And this was really depressing because I forgot the exact percentage, but I think around 8% gain. I would have made around 400 bucks on this one. A nice quick profit. Really would have ended up the week extremely strong on just one trade alone. This is exactly what I'm looking for. So this was a bit sad, but a good lesson for everybody. You know, overall, I did take my $70 profit and my roughly 2% here, so I can't complain. Every profitable trade, every good trade that you win, you're always going to look back on and be like, wow, I could have been a little bit better, or I could have, you know, made twice as much if I just shorted a little bit more or was a bit more aggressive right here. So in hindsight, everything's 20/20. So you can't really complain, especially if you don't lose money. But this is another trade, 3 in a row, that if I just held, you know, another 10-15 minutes, I could have not just doubled my profits, but, you know, tripled, quadrupled my profits. So a bit of a, I guess, a downer. Yeah, so overall, that's what I wanted to review this week. I would say nothing totally new. Actually, this is really similar to week number 7 weekly review, because last week I talked about a lot about sticking to my trades, or sticking to the plan a lot more. So if I kind of just followed my own advice, this week would have been a lot better. But you know how it goes when you're trading, everything's a little bit different. So 2 things I want to focus on is really sticking to the trades I know and the chart patterns that I love and are my bread and butter, which I have been doing and is pretty great. I also want to get a bit more comfortable with documenting, which will only happen over time, so just got to keep doing that. And also being a bit more patient, you know, realizing that this is crypto, this is a 24/7 market, and sometimes things take a bit longer to play out. That will really help my trading, I believe, as well, especially if the trade is going right and I'm already in the money and there's no reason to get out of a trade. So those are a few things I need to work on. Alright guys, that's everything I wanted to review this week. I'm looking forward to seeing everyone in the chat room, and I'll talk to you guys there. Ciao, ciao.